Guys, today I am going to talk about something that is actually very big, but it is not something that people are paying attention to right now. There's so much focus on the Bitcoin ETF that everyone are missing this massive opportunity right in front of their eyes. So guys, today I am going to share this with you. I am going to talk about what's been going on with the markets and much more. So welcome back everybody. My name is Chris, bringing you cryptocurrency videos every day, teaching you how to make money in this market. If you are new to the channel, then make sure to subscribe and activate the bell right now. So let's get straight into it. And on the 4-hourly time frame for Bitcoin, we have had a little bit of a downturn. So you can see that we had this little uptrend here, this little bit of a channel going up, and since then we have broken down, and now instead we do have a little bit of a trend of going down here. So not a lot has been happening on the 4-hourly time frame for Bitcoin. We've had a little bit of a pullback. This red line is still the make it or break it point for Bitcoin. If we can hold this level, this is currently at 25,300, so we're getting pretty close to it right now. But as long as we can hold this level, things are still, I mean, no matter if we are at 25,500, 25,900, or even 26,300. From a technical standpoint, it is all about being above this red line. And as long as we are above this red line, then we need to wait for a catalyst to then break us above 26,500, which is the next level of resistance here. So this is on the shorter time frames. On the 4-hourly time frame, things are still looking pretty similar to how they have been looking the last few days and weeks. Now, why did we see a little bit of a pullback here though for Bitcoin? Well, if you look at traditional markets did see a pullback as well, and the futures market, and you can see that we actually dipped down below the orange box. Right now, we find ourselves inside of this still, so as long as we can hold this on traditional markets, that is also a good sign. But this brings me into the massive opportunity that is arising, and a lot of people are not paying attention to this, and that is Ethereum, because I think that Ethereum could actually potentially be undervalued. Or let me put it this way, once we start to see the next phase of what I think is, the parabolic phase of the bull run, when you start to see that, I think Ethereum is going to be one of the biggest performers. Why? Because if you look at the technical level for Ethereum, there's a couple of things to note. Well, first, on the weekly time frame, guys, this is a chart I usually go back to. You can see that we are right below on the Bitcoin to Ethereum chart. So meaning this measures Ethereum compared to Bitcoin. So not compared to US dollars, but it just shows us if Ethereum is under or over performing compared to Bitcoin. Now, you can see that we are creating this like falling wedge on the weekly time frame, right? So something like that. So a little bit of a fake out here. But these falling wedges, they typically break towards the upside. Now, if we were to break like from this point, this is like early 2024 or December of 2023. So it's still some ways off. Again, this is on the weekly time frame. But this is why you need to zoom out, because I think that Ethereum could be one of the biggest trades of this bull market actually. And just to show you this, we do have some sneaky things that have been happening. And the first one is that Bernstein analysts actually believe that the Grayscale win, so the Grayscale already won that lawsuit against the SEC, but that is paving the way for a spot Ethereum ETF immediately after the spot Bitcoin ETF is approved. So we're all waiting for that Bitcoin ETF, spot ETF to be approved. And then immediately after, you could see the Ethereum ETF being approved as well. Now, do we have some evidence suggesting this? Well, yes, because the SEC is set to greenlight Ethereum futures ETFs already. So if you look at some of the applications here, there are massive amounts of applications for futures ETFs, not spot ETFs, but futures ETFs. And once these are approved, and it looks like the SEC are actually going to, it's reporting that the SEC are going to approve the futures Ethereum ETFs. And once you see that, and then you see the Bitcoin spot ETF being approved, you could see that Ethereum spot ETF be approved as well. It all starts with the futures ETF, and then it moves over to the spot. Now, another thing to keep note of here is that the reason for why a spot Bitcoin ETF has not been approved just yet, well, it was because the SEC didn't approve it, obviously. But if you look at the court documents, I do have a thread here on Twitter, on my Twitter, if you want to check it out. But the reason why the Grayscale case was won against the SEC is because Bitcoin already had a futures ETF. So the same arguments the SEC had against a spot ETF, they already approved a futures ETF. So which granted their kind of case for not approving that spot ETF pretty obsolete. So you are going to see a spot ETF approved eventually, and then you could see that Ethereum ETF being approved thereafter. So this is why loading up on Ethereum might not be such a bad thing. And also don't forget, one of the biggest things also is that Ethereum actually gives you yield. It gives you 4%. So this is something that is massive for all these institutions who wants to push crypto to their customers. They can sell this, telling them that they are going to earn 4% yield. Now, at the same time, Ethereum is deflationary right now. So if you look at since the merge, Ethereum 2.0, you can see that minus 300,000 Ethereum has been issued. If you compare this to how it was before, when it was using a proof of work system, it would have been 3.7 million Ethereum issued. So instead of 3.7 million Ethereum issued, you have minus 300,000 Ethereum issued. So Ethereum is deflationary. As more and more people are using Ethereum, more and more of the supply is getting burned forever. And so this is adding to the scarcity of Ethereum, which is eventually going to lead into higher prices. So all of these things, and then being deflationary at the same time, giving you 4% yield. And then you might ask the question, well, if you're getting 4% yield, how come it's still deflationary? It should be inflationary, right? Because more Ethereum is being issued, and that is what this yield is. Well, just like I explained, when people use Ethereum, it is getting burned. So the burn is offsetting the inflation you're getting, the 4% inflation. So yeah, this is all adding into the potential for some massive things for Ethereum in the next few months, guys, and definitely in the next few years. Now, finally, I want to also add to what's been happening with Binance. We do have some more things happening here, and that is that the head of product is departing as executive exodus gathers steam. So we already know that many executives have left Binance. Now we have another one of these. And some more reports regarding the sealed court case from the SEC. Well, it has passed the point of if not when speculation. This won't be an unregistered securities type of case. So this could actually be pretty big. Also, it won't be a US only action either. So this probably is something related to sanctions, related to something like this, which could be massive. Now, if you see this come out, and when you see this come out, you're most likely going to see a big drop in the crypto space. And I will be the first one to buy the dip. In fact, my trading bots right here, you can see that they are already buying the dip, and this is all good. I treat this as a dollar cost averaging strategy. If we continue to go down, then I am just going to accumulate even more. And then once things start to go crazy, well, these are all going to be at big profit. Guys, this is what I got for you today. Thank you so much for watching this video, and I will see you guys in the next one.